Welcome back to the Talking Hedge. I'm Josh Kincaid, Capital Markets Analyst and host of your Cannabis Business Podcast. Today, we're going to ask the question, is cannabis recession-proof? According to this Marijuana Business Daily article, they're asking if industry experts think that cannabis is recession-proof. The industry says yes, pointing to alcohol as a potential guide. So looking at the legal cannabis industry, coming into uncharted waters, as this article says, with a full-fledged recession being like the first time that large cap companies are publicly traded during a recession. The last 10 years have been pretty good to everybody. And even still, the cannabis industry took a beating with a Fibonacci retracement of over 60%. There's been a dead cat bounce in the overall industry. We'll see what happens, though. The coronavirus is inflicting severe damage, though, to the general world economy. So it's asking the question, how would legal cannabis companies hold up in a severe recession or downturn? According to several industry experts, they're thinking that it's going to be fairly well played out. I've said that it's going to have a V-shaped recovery. I also think it's interesting in France, there's a region in northern France that's outlawing or banning the sales of alcohol. So they're citing excessive consumption of alcohol is likely to create an increased disturbance and violence, especially within the family. And to take that a step further, Greenland bans the sale of alcohol over fears of corona, and then cites that the sale of alcohol has been banned in Greenland in a bid to reduce violence against children during the period of confinement over the spread of COVID pandemic. So with cannabis stores being recreationally essential businesses in 6 states in the U.S., so this could be a recession-proof industry, not only because SEN stocks have proven that every single time there's been a downturn with tobacco, alcohol, defensive stocks, and now cannabis stocks, but we're seeing places like France and Greenland possibly creating new potential users, people finding out about the medicinal benefits or just the relaxation, anti-anxiety, and so on. The news coverage of the sales increase in cannabis stores with lines out the door in the midst of the lockdown, showing that cannabis sales are essential business, that panic buying of toilet paper and cannabis is something that people deem essential. And so there's another article about panic buying cannabis in the UK, which should be a leading economic indicator that cannabis is recession-proof. There is an inverse relationship as the S&P has gone down in the past. Like in 2000 to 2002, it went down 47% when you saw tobacco and alcohol and defensive stocks all go up, gambling stocks, all of that. So there is going to be a quote-unquote recession-proof opportunity for certain cannabis stocks, especially if they're in an index when the indexes being the Dow, NASDAQ, S&P, when they all go down, these cannabis stocks will be recession-proof and go up eventually after all the initial carnage has been met. They'll have a V-shaped recovery instead of possibly an L, just moving sideways, which there are opportunities with some volatility, but in terms of being recession-proof, these will have an opportunity to bounce back a lot quicker. Case in point, this graph shows that alcohol sales at the wholesale level held up relatively well during the Great Recession that stretched from December of 2007 to June of 2009, and over the long term, sales increased. So if alcohol is any guide, the cannabis industry is likely to hold up relatively better than any other mainstream industry, such as airlines, restaurants, entertainment, leisure, and other sectors. A 2009 Nielsen consumer survey taken near the officially end of the recession suggested that people drank less expensive beer, wine, and spirits. So when it comes to stretching their alcohol beverage dollar, beer, wine, spirit consumers reported several bargain hunting strategies, which we've mentioned on the podcast. 420 is that opportunity. There seems to be some dips and peaks. So people are running out, buying a lot more, ounces, maybe a couple of cartridges, maxing out on their daily limits, and then not coming back as frequently as they did prior. So people are purchasing online with pre-orders and then going up to curbside or even delivery if that option is in their state. And then not going back as frequently. So I think there's going to be a big dip prior to 420 so that people are waiting to take advantage of that big sales day. So I've seen deals anywhere from 15 to 55% depending on the day. So I think those folks are going to wait and we'll see a huge dip prior to the 420 holiday. The 2009 Nielsen survey also mentioned that about half of the people reported not changing the way they shop for alcoholic beverages, and the other 50% actively seeking out the best deals. So, across all alcohol beverages, the most prevalent strategies included comparing shelf prices and then waiting for a sale and taking advantage of other special offers. In other words, in tough times, it's not as though consumers stop drinking or smoking. If anything, those habits are increased by stress. So, what alcohol and tobacco do during a recession, it skyrockets because people are stressed out. Remember, this is not financial advice. It's not completely recession proof, but cannabis is much better positioned to weather any economic downturn than other industries. Consumer behavior may change, preferences may change. So we may go from a top shelf to a lower quality in order to increase the amount that they're buying or just save some money. Nonetheless, what we saw at Harborside in California from Steve D'Angelo's company didn't see any noticeable effects from the last Great Recession. So for a certain percentage of the population, it's just as important as food and toilet paper. Could also be a shift back to the illicit market in California, in particular during a hard recession. Options might be for more price conscious consumers to go back to the illicit market because of the state local taxes are too high, relatively new market, and better options elsewhere. And of course, there's going to be a labor shortage. So there's already happening in Washington state. The coronavirus spread rapidly. So a lot of employees, from store managers to bud tenders, had to be furloughed or called off work, and school closures for them to stay home. So we're starting to see labor shortages impacting the industry more than the lack of demand. So all in all, coronavirus is severely impacting the global economy. Nothing is going to be safe from impact. But in terms of recession proof, saying that cannabis is recession proof is relative. It's everything is going to take a hit initially, but I think it's going to have a faster rebound than a lot of other sectors. And so in the long run, it will do better than the S&P and the Dow. But how well, time will tell. So with that, we're going to roll this one up. I'm Josh Kincaid. This is the Talking Hedge. Don't forget to like, share, and subscribe, or don't. And I'm out.